This week, we're reviewing the Mergence Renewable Energy Debt Fund. Now, the targeted fund size is 5 billion rand. As of the first close of the fund, its size was 1 billion rand. Now, the purpose of the fund is to generate long-term capital growth while promoting renewable energy assets. So we've got Masimo standing by to take us through the formation of the fund, its exposure to debt instruments in a very new sector. Massimo.
The Renewable Energy Fund is part of our broader impact fund products. It was launched in anticipation of the energy shortages in our country. So it seeks to address innovative ways of addressing those shortages whilst creating jobs. We will be focused on solar and wind. It is a debt instrument. It's an unlisted debt instrument. And the reason for this is that it creates a very compelling argument from a risk-adjusted basis as opposed to equity.
So, Mr. I just want to understand, I mean, just for the viewer's perspective here, in essence, you guys are creating a trust structure investment where you're going to be raising capital from investors and utilizing this capital to buy debt instruments, which is the back end, shall I rather say, or the back end of those is wind and solar. Is that correct?
Yes, to a certain extent, yes. We'll be raising institutional flows both locally and internationally to invest in the approved projects, the projects with purchase power agreements, which means they have an offtake from Eskom.
Masimo, normally these kind of structures or funds have a lock-in or a minimum kind of period. Is there one in this fund? So as investors, you want them to hang around long-term. Is it 5 years or is there no lock-in?
Yes, there is a lock-in. It is a closed-end fund. To a certain extent, it works like a private equity fund. So there is a lock-in into the fund. It's not an open-ended fund. And the reason for this was that we wanted the investors to share the same kind of risk. So an investor's profile who invests in year one is materially different to an investor's profile who invests in year three. And we wanted all investors to share the same risk.
And you talk about these power purchase agreements must, of course, already be in place. We've had 2 bidding rounds for the renewable energy sector so far. To date, we don't, in fact, have any of these large renewable energy producers feeding into the grid. How much risk is attached to this fund right now? And, how guaranteed are investors that they will get returns after this lock-in period?
Look, there is risk. But we did a global analysis of the default rates globally, and the default rates were minuscule. And as a result, if you look at our fund, it's got a very strong corporate governance kind of base there. We've got international advisors who've been through these type of funds and run their own funds in different countries overseas. So with any investment, there is going to be an element of risk. We are focusing on debt because we believe it's less risky relative to equity.
Masimo, I mean, the benchmark for this is JIBAR plus 4%. So, I mean, that's quite a nice benchmark to have for a debt instrument. I mean, if bonds, kind of governmental bonds, are yielding, at 7-8% at the moment, what kind of yields do you think you'll be able to pick up? I mean, this is obviously no guarantee of a return, but what are you shopping around for in this space?
Look, we are shopping for JIBAR plus 4. We don't foresee margin compression. And the reason for that is that I think 2 years ago when we looked at the space, we realized that the Basel III limits are going to have a constraining factor on your traditional lenders of capital, such as the banks. We approached the banks from an very early on to speak about these things, and we've worked with some of the banks on looking at these deals. So there's a due diligence check from this fund's perspective on a number of layers. One is obviously the sponsors, 2 is the banks themselves, and 3 is our own international advisory board.
Masimo, it's always interesting to talk about these funds because 10 years ago, 15 years ago, nobody would have ever thought that you can actually buy wind and solar returns, but it's nice to see that. The question I have is investors, obviously, we talked about the risk in terms of these projects, but there's another form of risk which is, let's call them return volatility. And it's maybe too early to really see the volatility through time with these kind of funds. But I would imagine that the volatility should be quite low, because these are, the wind and the sun shines and blows the way it does, and you earning a return on those energy projects in terms of a utility kind of return. Do you have any view on how these funds will be classified from a volatility perspective?
Look, we've kind of rated them from our side, and the credit rating we've given them were A's or triple B's, primarily because you have an offtake agreement from Telkom. So there is an embedded guarantee to the returns. If the projects go under, Eskom's taken the risk off the project managers at the bottom.
You know what's nice for me in this space is the fact that you've got a very large corporate and then a parastatal on the back end of this in many instances that are actually providing an implicit guarantee. And in essence,
the government actually guarantees these PPAs, if I'm correct.
Yes, absolutely.
Yes,
so you've got the guarantee on the back end of this, and you're able to then go to the front end of it and actually buy a debt instrument that obviously has a term maturity, so your capital is locked in for 4 years. Yeah. But if you're a big pension fund, why not commit some of your capital to something like this? You're doing good. Your capital is, well, it's not guaranteed, but quite frankly, right at the back end of it is a parastatal. What are you going to do? Are you going to buy their bonds, or are you rather going to do something like this and potentially pick up some yield for doing something like this? So there certainly is a market for this kind of thing. Certainly in the past, one of the big issues that we've had is the fact that you sat with renewable energy projects, but there was no guarantee. So you sat and there was always a debt instrument that you had to buy, but it was kind of, what kind of returns am I going to get for this kind of thing? Whereas in this case, you're getting the guarantee, which I think is
very interesting. Very interesting product, a very new kind of product in the South African space, and I'm sure the likes of Mergence are going to be coming to the market with more impact investing kind of funds.